Alrighty, folks, let's crack into it. Welcome, welcome. Last market update before Christmas. There's a small group of us today, exclusive, high quality, of course. Um, yeah, if you've got any questions or you want to talk on the way through, don't hesitate, just unmute yourself and jump in. Maybe there's a bunch of other people who are all at Christmas parties, I reckon. Anywho, let's get into it. Forgive me if I do just let people in as we go. So here we're looking at the Wellington market up to the end of November, obviously just over 2 weeks ago. Thankfully, we see a little bit of a bounce. I'm calling it a bounce off the bottom. In October, we saw underlying values as determined by the Real Estate Institute House Price Index at their lowest point since the previous boom, previous peak in October 2021. From October 2021, we dropped down to a low point. Ultimately, we dropped very quickly to July 22, and then very slowly to a low point in May 2023. We recovered heading into the election, and then we deteriorated again with a little bit of an increase, but then very gradual deterioration right up to October this year in terms of values. A little bit of a bounce in November, which is obviously only one data point, but crikey, we'll take that as a bit of a relief, and hopefully that's the floor. Will values increase from here? I mean, who knows? My personal view is we need to see the amount of the supply that we've got on the market, which is like abundant. We need to see that supply get absorbed and general tightening of supply before we see any significant increases in value. So obviously, if I'm right, then we'll see some warning, some advanced warning of significant price increases as the inventory and the amount of supply on the market erodes away. As I say there, the one note of concern for sellers is that in November there was quite a decline in the number of sales that were made in the month compared to November last year. Other things seem to, like I say, for example, the values increasing a bit, and other things seem to be they're not concerning. So that's a bit of an outlier that and perhaps just a one flashing kind of concern if you like that data point for sellers. For buyers, still a heap of choice out there, so get amongst it. All right, so median sale price 790 versus 775 a year ago, up a little bit. You can see from that red line there that that's broadly going sideways since July 22. You can see we hit the low point round about here, May 2023, recovered into the election, deterioration, stability, deterioration again. But interestingly, look at those last 4 months, the blue bar chart there, those are the monthly results. So since August, you had September, October, November, three consistent increases there since August. Is it a new trend? Yeah, maybe, I don't know. If you follow these meetings or my videos, I don't pay too much attention to the median sale price because it's affected as much by the underlying mix of properties sold as it is by underlying values. So the best guide to underlying values, which of course is what's most relevant, is the Real Estate Institute House Price Index. So this is the league tables showing the change in prices since the nationwide peak in late 2021. Wellington has led for all the wrong reasons, being the biggest loser in that time since late 2021. And we're no exception. We haven't changed those. We haven't broken that mold yet. So down 26% in the Wellington region since then, nearly 22% for Auckland, so not that far off. And 15% for the country. Over the last year, again, Wellington has fallen further than anywhere else. There still are several other regions that have fallen, but none so far as Wellington. Obviously, much smaller numbers than overall since the peak. But interestingly, look, I mean, New Zealand overall is still falling over the last 12 months. Over the last 3 months, it's not quite as clear, and Wellington is hasn't fallen furthest over the last 3 months, which is a relief. It's close to the bottom, but not at the absolute bottom. There's a couple of territories, a couple of regions there in negative territory. Wellington barely over 0.1. But at least we're not at the bottom of that particular time frame. There you can see there's the house price index. There's the bottom in May 2022. And if you look really, really closely, so it's general slow deterioration, and you look really, really closely, you see this tiniest of upticks here, right at the end here in November. And there it is, the house price growth, the movement over the blue is over a month, the orange is over 3 months, and the grey is over 12 months. So again, you see the last 3 or 4 months, at least the blue and the orange lines there have got a generally positive gradient. Still, we are in negative territory on the 12-month basis, but over the last 1 and 3 months, positive. As you can see here, 0.1%, 0.4%. Admittedly small numbers, but at least it's positive, not negative. Over the last year, you can see, look, every territorial authority in Wellington is negative there to varying degrees. So it's weakness across the board over the last 12 months to varying degrees. Over the last 3 months, it's not nearly as doesn't look nearly as bad. So obviously Porirua is still down 3%, but the other territorial authorities in positive territory at least. Again, Lower Hutt, Wellington City, only just 0.2 and 0.4%, but at least it's positive, not negative. So we'll take the small wins. Wellington City, that too. Again, you look at the shape of those graphs, you can see broadly the same shape, the same trends tend to be a bit more erratic. It's a smaller data set, and also we tend to get slightly deeper troughs, slightly higher peaks. That again is probably as much to do with mean reversion when you get a larger data set as it is with anything else. But the trend is the same over the last few months. That blue and the orange line there have a positive gradient, so that's encouraging. And 0.9% for the month is reasonable. That's not a tiny, tiny number for 1 month. So Wellington City also showing positive signs. New listings. Again, I think it's interesting looking at the red line that shows the longer term sort of trends. In the last little while, we've seen new listing volumes trending downwards generally. The last couple of months have been quite big listing months. October and November, they tend to be. And so that's brought the red curve up a bit there. You can see that we're still including these really low listing months. December and January also are relatively low listing months, and so we might see that red line flatten off again there. But time will tell. But 856 for the month of November versus 866 a year ago. So that's about the same, 9% more than 2 years ago. So yeah, as I say here, the red line there trending back up again. Perhaps just as interesting is, even though October and November are seasonally, as typically the case, relatively big listing months, still not up to the normal levels of new listings for the month of November at 925. So still 75 or 70 odd listings short compared to what's normal on the long-term basis. And there it is expressed in another way. So you can see there for the last 6 or 8 months or so, we've typically been seeing fewer new listings come to the market than we saw 12 months prior. That is what we want to see as sellers. We want to see a tightening of supply, or at least a tightening of fresh supply coming onto the market. But the last couple of months, that line is heading back to parity again there. So over the last 6 months, as you can see in the table there, 641 listings on average per month, exactly the same as the same 6 month period last year, which is why that red line is exactly hitting the x-axis there. So it'll be interesting to see where it goes to from here. So obviously as sellers, what you don't want to see is that red line above the line, the x-axis. We want to see it below the line for a generally tightening of the market. On the other hand, this number of sales taking place, again, over the last few years, in fact, the trend for number of sales has been relatively consistent, slowly increasing. But in the last 6, 8, 10 months, that has leveled off, as you can see from that red line, ups and downs and so on. But the general movement is sideways, not really up anymore over the last 6 months or so. But it's not going down, but that improving trend seems to have kind of weakened. 723 sales, and this is what I was saying at the top of the call. It's a big decrease on a year ago, down 17% from 870. So that's a worry. Is that just a one-off for the month? Or is that the beginning of a new trend emerging? The one potential reason that we might see buyer hesitation is we have seen an uptick, of course, in the mortgage rates in the last couple of weeks since, or the last few weeks since the rather conservative announcement of the Reserve Bank, sort of raising the potential for increases to come a bit, or for inflation to come back, and less chance of further decreases and so on. And so that pushed the swap rates up internationally. I noticed the new Reserve Bank governor has come out and sort of tried to calm the markets down, because the last thing we want is for this to stall our economic recovery. Now, of course, that announcement was made late in November. I think it's unlikely that that would have impacted November sales, because a sale in the last week of November, of course, is a result of activity in the first half of November or even late October. So I don't think that's the likely cause, but anyway, so it's just an interesting result there, 17% down. So let's hope that's just a one-off. And still, as with the amount of listings coming to the market, the number of sales taking place is still significantly below long-term averages for the month of November. And there it is again. Over the last couple of years, we have seen more sales taking place compared to 12 months prior, which is indicated there by the red line trending above the x-axis. In the last 6 months or so, it's been horizontal and just above the x-axis, and then just in this last 1 month, it's dipped below the x-axis for the first time in about 2 years. So as sellers, that's what we don't want to see. We want to see that red line above the x-axis for a generally tightening market, which will, in the end, produce increasing values. How long does it take to sell? Still quite a long time. Again, you look at the red line there. Generally, over the last couple of years, it's been taking longer since we came out of the election. But again, if you look deeper at the blue bar chart there, the monthly results, we are seeing a decrease in the duration to sell since the middle of winter in about June. But still, it's still quite a long time, 46 days versus 42 a year ago, 34 2 years ago, and the November average of 34, so we're still 12 days longer than is average for this time of the year. So I guess the story is it's still taking quite a long time, but in the last 6 months, it's improved. 16 weeks worth of inventory versus 13 weeks a year ago, and 13 2 years ago as well. Again, you see the shape of that red line. We saw significant increases in inventory out of the election, and then the last year or so, it's stabilized, or gentle increases only. The last 4 months, we've had 16 weeks worth of inventory. 16 weeks is only just longer than the long-term average of 15. As I keep saying, that's the very long-term average. And so if you looked at this metric only, you would say, well, we're in a broadly balanced market, or a broadly average market. It sure doesn't feel like an average market. It feels very much like a buyer's market. And that possibly or probably is because in the last 10 years, the average inventory has been 10 and a half weeks. And so 16 weeks, obviously significantly more than that. A number of TradeMe listings, 2811 versus 2703 and 2069, 1 and 2 years ago, respectively. So about the same as a year ago, and we've seen that for a number of months now. Small increases versus a year ago, significantly more than 2 years ago. We were just coming out of the election, and we were coming off relatively lower levels of stock. As you can see, down here at election time. Again, you can see the seasonal movements there. Overall, the trend on a 6-month average basis has been stock levels declining a little bit. And if you see, this is another portrayed in another way. So the last few months, sort of 6 months or so, we've had only a small amount of stock more than we saw 12 months prior. So again, as a seller, what you want to see is these stock levels reducing. You want to see this chart here in particular with that red line going below the x-axis. So in summary, folks, values are down a little bit over the last 12 months, but up a bit over the last 3 months. New listings are level, same as we saw a year ago, roughly, but they are still below November norms. Similarly, sales volumes. This is a bit of a standout data point, bit of a breakaway from the trend. They are, excuse me, well down on what we saw same time 12 months ago in November, but similarly still still similarly below November norms. So that's not what we want to see as a seller. Duration to sell is up versus a year ago, but it's been falling since June, still longer than is normally the case this time of year. Inventory is only just above long-term normal, but significantly above the norms of the last 10 years or so. TradeMe listings are a few percent more than last December, as has typically been the case over the last 4 to 6 months or so. And so overall, the message for sellers is look, fundamentals are very slowly improving in the market, although the exception is the number of sales taking place in November. But we are, in my opinion, quite a while off seeing this translating into actual increases in values, at least material increases. And the message to buyers is, look, it remains a great time to be a buyer, plenty to choose from, so get amongst it. Whatever you do, don't wait for things to get better. Thanks as always to Real Estate Institute and realestate.co. So, yep, that's it, folks. Happy to take questions or discussions. Also, equally happy to let you go and get to your family or your Christmas drinks or whatever you've got on for the evening.
Hmm.
No, that might be it.
Yep.
Nothing anyone needs. Is that someone wanting to ask a question? No, all good. All right, I'll bid you farewell. Just wish you a happy Christmas and safe holidays and everything. And yeah, we'll check in again in January. All right, happy Christmas, everyone. See you.